The current state of affairs in the United States has many people wondering whether now is a good time to buy real estate or sell real estate. In these confusing times, even thought leaders in the world of personal finance are having trouble understanding the data coming out of the housing market and how it's different from today and 2018. With the greatest respect to my own personal hero, Suze Orman, I have to disagree with her recent statement about the market, and here's why. Suze Orman made a post on Facebook recently, and I want to, if you haven't seen it, if you're not a follower of hers, I am a follower of hers, so I tend to see what she puts out. Suze Orman, if you remember, was on the Oprah show for 13 years. She's been a CNBC moderator and commentator for many years, and she's helped a lot of people like myself really put their finances together. She recently came out, and I want to read a post that she put on Facebook, and it said, "I would absolutely wait until September, October, November of this year before I even consider buying a home. One concern is property values. Many people will have to make up their missed mortgage payments around the time federal unemployment is scheduled to stop on July 31st. This puts them in a difficult financial position, especially if they're still out of work. It's not impossible that your neighbors may have to foreclose on their home." That's one point I want to bring up. The second, she said, here's the problem. Let's say you pay $300,000 for a home today, and your next door neighbor is out of work due to the coronavirus and can't afford to make mortgage payments. So they foreclose on their home. That house then goes for $150,000. Do you know what that just did to the property value of the home you just bought? Your property is now worth $150,000. Because when somebody goes to buy or goes to check the latest comp, they're going to see, oh, well, the house next door sold for $150,000. The house down the block, just like yours, sold for $150,000. There goes the price of real estate. And that's exactly what happened in 2007 and 2008. There are a couple points to this. Number one, foreclosure. The federal government is not allowing foreclosures at this point. Your lender or your service or anyone who is falling behind at this point, the lender or the loan servicer is not even permitted to begin a foreclosure on you until August 31st of 2020. That begins a very, very long 2-year, sometimes 3-year process. If somebody does not take advantage of all of the extensions, the corrections, the forbearance that is in place right now through every lender in the United States by federal decree, they still wouldn't foreclose on that property until the earliest next year. So there's nothing in the federal environment right now that's going to cause a wave of foreclosures. You could go on, any single borrower out there can go on to their bank right now, and it is in most cases as simple as push a button. The banks have it set up that, do you need forbearance due to COVID? Yes, you're getting forbearance. If you have a financial hardship due to the coronavirus, you have a right under federal law to obtain a forbearance for 180 days. So that's 6 months before your forbearance would go out, which would be next January. So that's just a minor point here. It's interesting that Suze is saying that there's going to be a wave of foreclosures, just even from the physical or the practical standpoint of how foreclosures work. The second point that she made was what a foreclosure might do to your property value. And I think it's very important to understand this one major difference between today's market in 2020 and the market in 2007 and 2008. I'm old enough to remember 2007, 2008. I'm sure many of you are. And at that time, there was so much inventory on the market that demand going into the foreclosure crisis of 2007 and 2008, demand was nowhere near as close to supply. In this case, we went into the coronavirus in 2020 with record low inventory. There weren't enough houses on the market when this crisis started. What's happened since then is demand has increased in many markets. It is increasing in more markets across the United States than it is decreasing. So, number one, demand means that values will stay up. Number two, just from a practical standpoint, if a bank receives a property back in foreclosure and goes to sell it, they're not going to sell it at a discount. They don't have to. So if the property went under foreclosure and market values in that neighborhood are $300,000, that's what the bank's going to sell it for. There's a lot more to this, and I'd love to unpack more of this, and I probably will in future videos. But with all due respect to my own personal hero, Suze Orman, this is not the same scenario. This is not 2007 and 2008. We are not flooded with properties that are driving down property values. It may be the right thing for you to wait. If this might not be the time for you to come on and sell your house or to buy a house. But it's not because of those reasons. It is not because a wave of foreclosures are on the horizon. They're not. And it's not because foreclosures are going to drop property values, because they're not. I'm looking forward to talking more with you. If you have questions, be happy to chat with you directly about this. Hope you're doing well. Hope you and your family are safe. I'm SandiWarner with Warner Realty Group. Have a great day.